Today's discussion centers around a fascinating new ETF, the REX Bitcoin Corporate Treasury Convertible Bond ETF, or BMAX. It's a unique approach to Bitcoin investing, and we have an expert here to unpack it for us. What immediately struck you about this ETF's strategy?
The innovative use of convertible bonds issued by companies holding Bitcoin in their treasury. It's a clever way to gain indirect exposure to Bitcoin while mitigating some of the inherent volatility.
Exactly. It's not a direct Bitcoin investment, which is a key differentiator. How does that affect the risk profile?
It significantly reduces the volatility compared to directly holding Bitcoin. The bond structure provides a cushion against market downturns.
So it's a more balanced approach. Let's delve into the specifics of how this ETF works. The ETF invests at least 80% of its assets in convertible bonds from companies that meet specific criteria. Can you elaborate on those criteria?
Yes, these Bitcoin corporate treasury companies must hold at least 15% of their assets in Bitcoin or Bitcoin-linked instruments, derive at least 15% of their income from Bitcoin-related activities, or be directly involved in Bitcoin mining. The focus is on U.S.-listed public companies.
Right. And the fund's active management plays a crucial role. How does the manager actively manage the portfolio?
The manager actively selects and manages the portfolio of convertible bonds, aiming for a diversified portfolio of 10-15 bonds across 5-10 issuers. As bonds mature or convert, they reinvest proceeds into new qualifying bonds, adapting to market conditions.
That flexibility is key to adapting to the ever-changing cryptocurrency market. What about the coupon rates on these bonds? I notice many of the bonds have zero or near zero coupon rates. Isn't this ETF designed for income generation?
No, the primary objective isn't income generation. The strategy focuses on indirect Bitcoin exposure through the equity optionality embedded within the convertible bonds. The bond structure offers downside protection, while the potential conversion to equity offers upside potential linked to Bitcoin's price.
I see. So it's a growth-oriented strategy, not an income-focused one. Let's talk about the risks involved. The prospectus highlights several risks, including Bitcoin corporate treasury company risk, convertible bond risk, and MicroStrategy Incorporated investing risk. Can you elaborate on these?
Certainly. Bitcoin corporate treasury companies face risks associated with Bitcoin's volatility and regulatory uncertainty. Convertible bonds carry both equity and debt risks, influenced by interest rates and the issuer's creditworthiness. MicroStrategy's significant weighting in the fund concentrates risk as it's a major issuer of these bonds. Other risks include active management risk, liquidity risk, and the fund's relatively new status.
The concentration risk in MicroStrategy is a significant point. How does the fund address this?
While MicroStrategy currently holds a large portion of the portfolio, the active management allows for diversification across other Bitcoin corporate treasury companies as the opportunity set expands. The fund strategy isn't solely reliant on MicroStrategy's performance.
That's reassuring. Let's discuss the benefits of this unique investment approach. What are the key advantages of investing in BMAX compared to direct Bitcoin investment or other Bitcoin ETFs?
BMAX offers a unique blend of debt stability and equity upside, providing a less volatile path to Bitcoin exposure. It unlocks a market typically inaccessible to retail investors, offering diversified exposure to convertible bonds in a single ETF. It avoids direct Bitcoin ownership and doesn't use derivatives.
It sounds like a more sophisticated and potentially less risky way to participate in the Bitcoin market. Who is the ideal investor for BMAX? The marketing materials suggest BMAX is suitable for investors seeking a balanced approach to Bitcoin exposure. Can you elaborate on the ideal investor profile?
BMAX is well suited for investors who want Bitcoin exposure without the volatility of direct ownership, prefer a less volatile investment than Bitcoin mining stocks, and appreciate the structure and regulation of an ETF. It's for those seeking diversification with built-in downside protection.
It's a compelling alternative for investors who are intrigued by Bitcoin but want a more measured approach. Let's look at the performance data. The provided data shows a positive return since inception, but it's important to remember that past performance is not indicative of future results. What are the fund's operating expenses?
The total annual fund operating expenses are 1.14%, including a 0.85% management fee and estimated tax expenses. Investors should review the prospectus for a complete understanding of all fees and expenses. It's crucial to remember that short-term performance is not a reliable indicator of future performance.
Absolutely. Let's briefly discuss the distribution calendar. The fund anticipates paying quarterly dividends, although they are expected to be minimal due to the low coupon rates of the underlying bonds. Is there anything else investors should know about the distribution calendar?
The distribution calendar is available on the RRX Shares website and outlines the declaration, ex-dividend, record, and payable dates for each distribution. Investors should refer to the official documents for the most up-to-date information.
Excellent point. Let's move on to the fund's holdings. As of May 8th, 2025, the fund held a concentrated portfolio with a significant weighting in MicroStrategy. How does this concentration affect the fund's risk profile?
The concentration in MicroStrategy does introduce concentration risk. However, the active management strategy allows for adjustments to the portfolio composition over time, aiming to diversify holdings across other Bitcoin corporate treasury companies as opportunities arise.
So while concentration is a factor now, it's not necessarily a permanent feature of the fund's strategy. Let's discuss the convertible bond details. The document provides details on several convertible bonds held by the fund, including issuance dates, maturity dates, coupon rates, and Bitcoin prices at the time of issuance. What insights can you offer on this data?
This data illustrates the diversity of convertible bonds within the portfolio, highlighting the varying terms and conditions of each issuance. The Bitcoin prices at issuance provide context for the valuation of these bonds at the time of purchase. It's important to note that this data is subject to change as the portfolio is actively managed.
This data is indeed dynamic and reflects the active management approach. Let's discuss the BMAX approach as described in the marketing materials. The marketing materials emphasize the BMAX approach, which focuses on Bitcoin exposure, not coupon income. Can you elaborate on this?
The BMAX approach prioritizes indirect Bitcoin exposure through convertible bonds, aiming for total return rather than income generation. The strategy avoids direct Bitcoin ownership and doesn't utilize derivatives. The active management allows for adjustments to the portfolio based on market conditions.
This is a key aspect of the fund's strategy. Let's discuss the frequently asked questions. The website addresses several frequently asked questions, including whether BMAX invests directly in Bitcoin, how it differs from other Bitcoin investments, and who should consider investing. What are some key takeaways from these FAQs?
The FAQs clarify that BMAX does not invest directly in Bitcoin, but rather in convertible bonds from companies holding Bitcoin. It highlights the benefits of downside mitigation and the diversified approach compared to direct Bitcoin investment or Bitcoin ETFs. The ideal investor is someone seeking a balanced, less volatile approach to Bitcoin exposure.
The FAQs provide a clear and concise overview of the fund's key features and benefits. Let's conclude our discussion. In summary, the REX Bitcoin Corporate Treasury Convertible Bond ETF offers a unique and potentially less risky approach to Bitcoin investing. It leverages convertible bonds to gain indirect exposure, mitigating some of the volatility associated with direct Bitcoin ownership. What are your final thoughts?
BMAX presents a compelling alternative for investors seeking a more balanced and sophisticated approach to Bitcoin exposure. However, it's crucial to carefully review the prospectus and understand the associated risks before investing.
That was a great discussion. Thank you for your insights.